So there are different kinds of confirmation patterns. So Euro USD, this is a trade to enter right away, because you can see, not right away, but you have to wait for confirmation, but you still see the head and shoulders. Someone can easily notice it on the 1 hour, still someone can notice it on the 30 minutes, 15 minutes. Is it there? Maybe, yeah, you can also notice it on the 15 minutes. So it's this. So this is a confirmation pattern that we can now enter the trade. You can see on this previous resistance here, the pattern was there. Let's see. Yeah, this pattern was there on the previous area of interest. Yeah, so you can see this is a left shoulder. I think the head is, yeah, you don't try to have to force it, then so regardless the time frame you're trying to see it, but maybe you, since this is an area of interest, so you always have to look out for confirmation patterns that show you're looking for buys. Remember this, the thing that gives you the direction where you're going to go is this: the weekly, the daily, the 4 hour. So if they tell you bullish weekly, daily bullish, 4 hour bullish, that means you have to look out for buys. Yeah, is the HTF analysis says buys. That means everything you're looking out for buys. So you're going to come to the confirmations and look out for patterns that only confirm the buys. Do not look out for patterns that confirm the sells. Only look out for patterns that look for buys at the areas of interest. So it's the direction that gave us this. Then here it's not being shown clear. Let's go 30 minutes and see. 30 minutes. Yeah, you don't see it. Maybe here it's still there, but if you to look in, it is there, but this is past while we're concentrating on it. It's past. You're trying to look out for such confirmation patterns and see. So you could see maybe what you could use here, because here it was reaching at the area of interest. You can see the bullish. You can easily see that the next steps are going to be bullish steps. So this one, you can see why it's just being from it, and then it goes on. Yeah, but best look out for such confirmation patterns and see if the market is really going to give you a go ahead. So here, for us to enter the trade, wait for a bullish engulfing or some bullish setup to give you, like this has to be a bullish engulfing. You can see the doji stick, or yeah. So this doji, it shows that this is really a pin bar. It is telling us that sellers are coming in, but that is why you have to wait for a confirmation, because if we are sellers, it shows sellers are coming in, and this is an area of interest. So that is why you have to wait for a better confirmation. Whether it goes above the area of interest, yeah, it can go above the area of interest, then it decides to retest this area of interest. Also, another confirmation is that you have to wait for break and retest, because this can easily go up, and when it reaches here, it comes to break. So you see, when they always break the area of interest, there has to be a retest to confirm that this is our pushing area, or this is our bed. So every time the market goes up, it always has to come back and retest the area of interest. You can say, I think it did it around here. So it passed via the area of interest, it went up, then it came back down, then it again went. Yeah. So this was an area of interest. Yeah. So here it is going to move up and then reach here and then come back to reset, then it will go to the upside. Yeah, so like that, this area of interest. And then I think also this area of interest, it did the same. Yeah. By the moment, yeah, it did the same, so it went up, it passed by the area of interest. Yeah, so as it was going, it came back to retest, then it went up. Yeah, so this should have been the take profit. So the moment it hits, then you move out of the trade. So you see all this movement here. Yeah, this can be a retest, but yeah, it is a retest, but you're interested that you take profit here. Yeah. So if your take profit was here, you move out and just remember, not each and every move is used, just go with the moves that are used. So I think yeah, so now after analyzing all that, so at the minute time frame we've confirmed there's an inverted head and shoulder, so that's a confirmation. So then we can call this also 10% because we already have our confirmations. But now we have to wait for a break and retest here. That's what I'm saying. So we're not going to enter the trade right away, so you can enter the trade here, but still, yeah, it can still play, but don't enter aggressively here, as the market can do any other thing. It can move down here. It can also move down here. Don't enter aggressively here, as it can do anything here down and move further down, and then it can take 4 days to come from here, and then it goes and then it starts entering here. So then again it moves here and it comes back and retests. So wait for a test, or you can enter, but don't enter aggressively down here. So wait for it to break your area of interest, then it retests the area of interest, then it will move on. So we've now confirmed it is 10%, then higher time frame and lower time frame, are they in sync? Yeah, they are in sync, because you'll notice that you're having movement to the upside, and then you can have blue, the doji stick, and that on the 1 hour. You can see the candlesticks are moving up, but then there's this wick here indicating that sellers are coming in. So 2 hour, it is doji stick, then 4 hour, it is bearish. So the higher time frame and lower time frames are not in sync, so we have to wait for them to come into sync. Yeah. So you either have to wait for a bullish candlestick moving up, since you have the red. You have to wait for the bullish moving up, and then you can say that they are in sync, they are moving up. But otherwise they are not in sync, so that doesn't give us a trading entry at area of interest. We haven't yet entered, but it is at the area of interest. So you're going to enter the area of interest. So still, this is also an added confirmation. Entry at London or New York session. This is also counts, because you have to enter the trade at a London or New York session. Asian session doesn't move. So far what do we have? So in our confluence list, we have percentages. We count 1, 2, 3, 4. That's 14. 5, 50%. 6, which is 60%. 7, which is 70%. Yeah. For now, we have 70%. So if we enter at the London or New York session, entry 80%, entry at area of interest 90%, HTF and lower time frame in SIG, that's 100%. Then finally, we get to have our trade, which is 100%. Let's say everything was made. That means it's an A trade. That's an A plus or whatever. And I agree, because I really failed subjects, but maybe that's an A plus. And all I know is 100%, so you've really passed. So let's say if it was 70%, you didn't enter at the London or New York session, entry at area of interest, you didn't take the trade, HTF not in SIG. So that means you are not sure whether to take the trade, you've just bet whether to enter or not. But you still have these confirmations. That means the trade is going to play out. But remember, when you enter the Asian session, it's that tiny candles that are going to move. So you won't have really that much profit. So it's better you sleep, you take your rest, and in the afternoon or early in the morning, that's at around 10 a.m., you enter the trade. Yeah, you're sure that your trade is going to pay off. So right now we have 70%. We have to wait for tomorrow at London session, and then we enter the trade. That's 80%. Entry at area of interest. Yes, it's almost at the area of interest. You have to wait for that too, because this trade can also play something like this. It can come back here, then it comes back down here, then here, here, then it moves like that. Then maybe on Wednesday, that is when you can see the trade playing out like this. And then finally, it gives a long bullish move to the upside. So you don't know, this market can even move from here in Monday, Tuesday, Wednesday, Thursday, Friday. Yeah, all it can even do this movement and Friday to give the final move. So never predict. The market is not your friend, but you're trying to see that you get some profit out of it. Yeah, so that is it for analysis for Euro USD. And let's wait for Monday. Then you get 80%, 90% till 100. At least we know that the price sections we have identified the lower time frame. So yeah, still look at this. These ones we identified the weekly, daily for her, that is 10%. Yeah, the area of interest we identified it 10%, but it has to be on the daily or the weekly. Yeah, and then HTF price action and then you can have identified it. Then HTF candlestick at area of interest, yes, like that. So let's say here was, maybe this was bearish, maybe the weekly was bearish. And why is this number replacement by, let's say this was bullish, no, let's say this was bullish and then it was bearish. Here, if this doesn't, then do not give it a percentage there. So, but why? Because this bearish, bullish, bullish. So not two time frames are synced, so don't take the trade. So let's say this was let's say this was the weekly was the one which was, or let's say the 4 hours was the one that was bearish. So if they are not in sync, so then don't assign that one a percentage. So when you count in your trade percentage level, you say 10, 10, 10, 10, 20, 30, 40, 50, 60, then this is 70. If this one counts 70, 80, 90. So if it is 90%, then take that trade. If these ones are not there, then your count will be 60. So 60%, we are not sure, so we don't take the trade. If it is 50%, then don't take the trade because that is 50-50. So don't take the trade. So you have to always wait for such confirmation, and yeah, and that we can go for the trade. Okay, that is it for the last pair. So this pair, then we can go on to the next pair. So we're going to analyze around 10 pairs for today, and then we can narrow down and then choose maybe around 2 pairs that can give us a trade. Because all those pairs, not each and every pair is at the area of interest, not each pair is bullish, bullish, bullish. Maybe the weekly can be bearish, the daily can be bearish, and then the 4 can be bullish. So not all those pairs are going to give you 90% or 80%. So remember, if you analyze the 10 pairs, that means 3 of them can give you 100%, or 1 can give you 100%, then the 2 can give you 60%, or the 4 can give you 60%, others 50%. So you choose which one, the 100%, the 60%, or the 50%. So you choose among the trades, and then you decide whether to be patient or whether to just enter the market straight away. So it's a new choice. So we are going to analyze 10 other pairs, and then we get which pair is perfect for us to enter the trade for Monday session and the London session. Okay.